updates that we have on, NLGIC Group, which is, new pioneering insurance leader for the GCC. Before we get started with the agenda item, just wanted to take you through a quick disclaimer, which I will read it out, loud. The materials in the presentation prepared by NLGIC is a general background information about our activities, current as of date in this presentation. Information given is in a summary form, does not purport to be completed. Information in this presentation, including forecast financial information, should not be considered as advice or recommendation to investors or potential investors in relation to the holding, purchasing, and selling securities to other financial products, or instrument that does not take into account your particular investment objective, financial situations, or need. Before acting on any information, you should consider the appropriateness of the information having regards to these matters, and any relevant document in particular, you can seek independent financial advice. A presentation may contain a forward-looking statement, including statement with our intent, belief, and current expectation with respect to the company's businesses and operations, as well as market condition, resulting in operation and financial condition, capital equity, specific provision, and risk management practices. Readers are cautioned not to place any, reliance on these forward-looking statements. The company does not undertake any obligation to publicly release the result of any revision to these forward-looking statements to reflect, events and circumstances after the date, today, herefore to reflect the occurrence of unanticipated events. While due care has been, used in the preparation of the forecast information, actual results may vary in materially positive or negative manner. Forecasts and hypothetical examples are subject to uncertainty and contingencies outside NLGIC control. Past performance is not reliable indication for future performance. With that, I'll take you through the agenda of the slide and the structure, introducing our key speaker. Our Group CEO, Martin Rueegg, will take us through the NLGIC Group introduction. Our Group Chief Operating Officer, Dr. Dhafir Al Shanfari, will take us through the strategy overview. Dr. Abdullah Mansury, our Group Chief Financial Officer, will take us through the financial highlights. And on the market overview, as well as rewards, our Group CEO, Martin Rueegg, will take us through these two highlights. With that, I will pass it on to Martin Rueegg, who will take us through the NLGIC Group introduction. Over to you.
Very good. Thank you very much, Shaima, and good afternoon, everybody. It's my pleasure to have the next hour or 55 minutes with you to give you an update, not only on the 2022 results, but mainly about who is NLGIC now compared to where we are coming from and where we are heading to, including some strategic initiatives and strategic direction. Just before we are going in, and I think it's really important to set the scene, again, where we are coming from and who we are now. We call it NLGIC Group, but that's what you can see on the slide in front of you is really the leading life and health insurer in Oman, in the UAE, in the region, which you have known most probably for many years and have followed and seen the performance. Now, through the acquisition of RSA Middle East, combining now the RSA Middle East strength. When we break it a bit more down, RSA Middle East has then two subsidiaries, one called Al Alamiya, which is in Saudi Arabia, listed company in the general insurance, but also having some life exposures, and Al Akhliya, which is obviously the Oman incorporated subsidiary listed company. And we will explain a bit more about this in a short while. On the national life and general side, we have also in addition to the two branches in the UAE, plus also the Kuwait business and upcoming Qatar business, the support service entity in India, which you can see NLGIC Support Services, as well as the ownership over a third-party administrator, TPA Inaya, in the UAE. So you can see this is really a strong group in the building, a top 10 insurer across the region, which has the roots in Oman, is headquartered in Oman. And that's where we really believe we have built one of the leading insurers in powerhouses, which are going and bringing us to the next level through the synergies, through the additions of the two businesses. On the next slide, I try to give you a quick snapshot on where we are and where we are positioned. So what you can see here, and I give you just shortly after this a bit a historical rundown, but we have been in the region for more than 80 years across multiple entities, multiple parts. Around 1,200 employees across the group, including obviously our Indian operations, 1.5 million customers, which is really a strong customer base again across the GCC. When you look on the bottom, this is annualized numbers. Dr. Abdullah will share with you the financial for 2023, where for the RSA part, you only have half year after the legal day one. But annualized numbers, you can see our key markets from a top-line perspective, the UAE, where both entities have been operating, National Life as a strong insurer on the health side, RSA as a P&C and a motor insurer in the market with 146 million Omani Riyal premium, followed by Oman, which is also a strong market. And again, you know it very much through the two, I would say, subsidiaries or branches. The one is the headquarter of National Life. The other one is Al Akhliya, which is the brand RSA was operating in the motor and P&C space. Saudi Arabia, an important market which is growing fast, which is evolving fast, which is creating a lot of opportunities. I will give you a bit insights later in the presentation where we believe the growth will come from for the GCC, but also for us as a group. But definitely KSA, Saudi Arabia is one of the key drivers. And then the smaller businesses, Kuwait on growing 5 million now, going then Bahrain 2 million, which is mainly on the back of RSA, Kuwait mainly on the back of National Life, and Qatar, what we just opened in this year, and we'll commence operations soon there. So that's where you can see an insurer, one of the few who has a footprint across the GCC, who has a solid customer base, has a solid track record. And maybe talking about the track record on the next slide, again, it's a bit the busy slide. We filled in and tried to fill in the history. On the top, we have the RSA Middle East history, goes back to 1950s, started in the UAE, coming then through KSA, through mergers, through acquisitions, basically to where it is, expansion also territorial in 2009 in Saudi Arabia, 2010 Oman, and so on and so forth. So you can see up to the point where in 2021, 2022, RSA as a group, which was the major shareholder of RSA Middle East, decided to exit, and that's where National Life was taking over the shares of RSA in RSA Middle East. On the bottom line, which most probably is a bit more known to you because you have most probably followed in the past years the development of National Life, started in 1995, going firstly strong in the Sultanate of Oman, but then moving into Dubai, Abu Dhabi, having shareholder changes who really accelerated development with Ominvest, and then entering Kuwait, Qatar, and pushing the business ahead. And now, obviously, having the RSA franchise and footprint across all the markets is really bringing the two good worlds together. That's also something which was for us important when we built the new group, is really the complement of each other and the strength we are building. And this strength for us, particularly on the financial side, was very important. And on the next slide, you can see that we spent time and discussed with AM Best, who has been our rating agency for many years and knew us quite well, be it for National Life, but also on the RSA Group side, AM Best has been the rating agency. So we explained to them our strategy, which is in part what we are sharing with you also today, where we are going, where we are, what's our starting point. And we are really proud to share with you that our long-term credit rating and financial strength rating is an A-, which is a very solid base, which again is a testimony to the group we built by the merger of these two entities, which is a top 10 insurer in the GCC region with the roots in the Sultanate of Oman. On the next slide, and that's obviously very difficult in the short time we have, and I'm sure we will have chances in other events and platforms also to go a bit deeper, but we have the three, I would say, business lines, which are the pillars across the group, and we put them non-territorial, but medical, that's our backbone, that's where we're coming from, that's where our strength sits, with a few key enablers which are there. As we all know, insurance as such, scale is important. When you looked at the results of most insurance companies across the GCC, the ones with scale, the ones with a footprint, the ones who can service, they had the advantage to be more successful and outperform. The ones who lack scale, they struggled and had obviously cost challenges and also much more volatility in their result and development. Hence, for us, medical is the core business, sits at the center of what we are doing. And you can see a few elements there, but also where we believe now with our knowledge, with our expertise, not only the expansions into Qatar, which was already on the books for 2022 and is coming now to life in 23, but now with the licenses and subsidiaries we have in Saudi Arabia, bringing this expertise into the Kingdom of Saudi Arabia to make a difference there. The middle pillar is motor. Again, is a strong pillar across the region. Medical and motor count for majority of the business across the GCC in most markets. Very important there. But RSA strength was always on the technology side, on the scale, on managing the supply chain, but also moving much more into digitalized sales support to partners, sales support to direct customers, and leveraging the analytics, and again, make this available to all our portfolios. And for me, motor is the entry points, I would call it, in a wider segment than the personal lines or end customer, retail customer propositions. On the right-hand side, last but not least, the P&C segment, which is more the commercial lines, as we call it. Again, that's where scale is important, where diversification is important. You can't be just in one country. Building the capabilities, having the capabilities from an underwriting, from a people perspective, but also systems, that is something which we have in the group, and we want to make sure that we explore and exploit it in the markets where we believe it can make a difference, including also some of the reinsurance solutions we believe are on the cards for us. So these are the three business lines. Now, when you look on the next slide from an organizational perspective, what we did when we came together as a group, we wanted to make sure that we have a diverse leadership team who brings in various expertise and experiences to really make sure we are building the group with a vision for the future and not just operating for what we did in the past. And that's where you can see, I'm happy to share, and you will hear Dr. Dhafir speaking shortly about operations, leading these elements, Dr. Abdullah, finance, and then the three business lines, Mr. Venkat, who you know from the past presentations, leading our health, life, and supply chain being mainly the claims, but also making sure that all support services are really leveraging each other and have the highest level of efficiency. Ahmed Nassef, who is with us on the call today, leading the commercial lines as well as the reinsurance. Again, happy to take most probably questions if you have towards the end. Adil Sarwar, who is also with us, leading the personal lines, which is heavily motor driven, but again, there are other solutions. And Hanna Al-Hinai, who is our CEO for the Al Akhliya brand. As you can see, a diverse team. We are just having a new joiner in Saudi Arabia who joined the team shortly, but that's where we drive the group, not only we focus on Oman, but making sure that the whole strategy and implementation and execution is really rolled out across the whole of the GCC. With this, and I know I went relatively fast, I'd like to hand over to Dr. Dhafir, who gives us a short overview on the strategic initiatives and I would say the pillars, and then we can take it also in questions at the end of the session. Over to you, Dr. Dhafir.
Thank you, Martin. Good afternoon, everyone. Allow me over the next few slides to go over the overview of the strategy, and we'll start with the first slide, which is basically a question we had for ourselves over the past few months in terms of coming together. What is the quintessential role that we play as an organization, and how can we articulate it in such a concise and relevant manner? And thus, we believe our purpose is to instill confidence in people to live the life they want, well prepared for the unexpected. This is our purpose as an organization, and we intend to do this. We do it by creating a beyond insurance ecosystem that has customer needs at the core. And beyond insurance will be explained later, but generally the strategic direction to go beyond the direct insurance business and across the verticals. And basically the ambition for us obviously is to be the leading insurance player. The combined companies, the capability that we have no doubt that we will be a leading insurance player in the region and beyond. And the way we articulated our ambition is to be a leading regional multi-line insurance company, delivering value to customers beyond insurance and sustainable and profitable earnings to our shareholders. And that has been a key driver behind the integration that was announced last year. Obviously, with our values, we have had these values across the many years we've been working as separate entities, but as a group, we had sharpened and emphasized 4 key values that define and guide our organization culture. Agile, today we live in a fast-paced world. We have to be flexible in how we work. We need to be fast in making decisions and quick to pivot and embrace change. Acceptive, we operate today in 7 geographies and very diverse teams, and we're going to go beyond the GCC in the future. So we need to put up and emphasize the importance of acceptive being and collaborative, communicating transparently, fairly with each other, with our partners, with our customers, encouraging diverse point of views and respecting different ways of working. Ambitious is obviously embedded in our DNA. We don't believe good enough is enough. We aim for the highest standards, not the market standard, not just in innovation and product development, but as importantly in empathy and integrity. Accountability is another key value that we are positioning as one of the 4 key values. The responsibility, not just as a job. We are dependable, not just available. We must advocate and consistently show up for our customers and for each other. I think this comprises the A-team culture that we are going to cascade across the group and emphasize again, bring back again in our DNA, in our policies and procedures in the coming months and years. On the next slide, this gives you a summary, or alongside the natural cost and revenue synergy that we will realize with the 2 strong companies coming together, we have devised our new group strategy that will enable us to deliver our purpose and ambition. And there is a focus on 4 key strategic pillars on your left side, and starting with being obviously a leading multi-line and multi-segment insurer. We have a comprehensive menu of what Martin had alluded to in the previous slides, and moving on to becoming on the second key strategic pillar as we build a modular and agile business platform that can be plugged in different markets and with different entry strategies, but the platform and the flexibility is there at the group level to be able to position ourselves depending on the right market conditions. And the third key strategic pillar is differentiating and obviously keeping our customer at the heart of our delivery by differentiating our customer value proposition. And the last goes to the delivery or beyond insurance proposition by diversifying via vertical integration and other key partnerships. And today we have a very good start with very strong partners in our shareholders and our board with Bank of Riyadh and Saudi Arabia. Ominvest would be a very good springboard with our other external partners that we can play with and partner with and develop roll out our strategy. The 6 focus areas and business initiatives that will across those 4 strategic pillars include scaling up the medical business across all the GCC, scaling up the motor business while we re-establish a profitable portfolio, scaling up the P&C business for the combined entity across the GCC, and obviously continuously the performance optimization, building on best-in-class efficiency and synergy on the operations, scale up savings products in the life business line, and the talent management and organization culture is obviously always there, and it's going to be more emphasized in terms of creating a learning organization and retaining talents and grooming talents across the group. I'll end my section with a quick glance of where we were and where we are or where we're heading. It's very high level. Obviously, we had announced in April the acquisition discussion with RSA. The SPA was signed in a very short period. In less than 3 months, we were able to, working closely from day one, to complete that transaction and what we had termed at the time legal day one, which is basically the completion of the buyout of the RSA Global shares in RSA Middle East and the share swap with our Saudi partners to bring them on board the NLG Group and the NLG family. And that same period, we had also shortly after announced the leadership team Martin had presented, and we had progressed since then very well when it comes to integration, whether it be the combined business strategy that we are just giving you an overview of, and or the other matters, the branding and the other matters related to the business integration developments. We had also completed by the end of the year the remaining minority shareholders buyout of Al Ahliya, and we are in the process of closing out the future 100% ownership of Ahliya, currently being owned by RSA Middle East and NLG, but transferring the remaining RSA shareholding to the group shares. We have also been working on, we're very proud to have recently submitted our first group consolidation of our annual accounts, and we have also the new brand being aligned with the new vision that we will hopefully roll out in the coming months. We are targeting to complete customer day one within this year, and we are leveraging already. We're not waiting for customer day one. There are a lot of synergy happening, discussions, cross-selling, and integration at different levels across the business in Oman, UAE, and beyond. And we hope to continue next year on scaling up and expanding our business in Qatar and in Saudi and in the Emirates. And we believe we have the strategy in place for this to happen. So thank you, Martin, from Shaima, from my side. I think this would be it. I think I would hand this back to Martin.
Thank you very much for sharing this. And I'm just passing on most probably the ball to Dr. Abdullah, who obviously did long-awaited financial updates. Abdullah, most probably in the introduction, important to highlight for the RSA numbers consolidated, as Dr. Dhafir just mentioned, is only from legal day one. So, and of course, that's making the year-on-year comparison sometimes a bit more difficult. But over to you, Dr. Abdullah, to guide us through the financial highlights.
Yes, thank you, Martin. Good afternoon, ladies and gentlemen. I'm pleased to show you some highlights on the financials that center around premium development, profitability, as well as an insight into the financial strength of the overall group. If we see at this slide, you see that on a year-to-year basis, the premium development is positive. We talk about an improvement by 57%, reaching 231 million Omani Riyal as gross written premium. Obviously, this includes the element of RSA in the integration for the second half of the year. But it's important to note that the growth is not only coming from adding the RSA entities, but also from the existing business of the NLGI parent entity and its branches. So out of the 57%, a solid 12% alone has come from the existing operations. That growth was primarily driven by growth in the United Arab Emirates and in their medical portfolios in Dubai and Abu Dhabi that have grown very pleasantly. So this is a good sign. But next to the overall top-line development, it's also important to see what it means for the technical results, and the net underwriting result has also increased by almost 70% on a year-to-year basis, from a little more than 16 million in 2021 to almost 28 million Omani Riyal in 2022. Again, this is also driven by the influence of the merger with the RSA entity that has delivered a substantial part of that growth. For the existing business, it has been partially affected and impacted the NUR to a few percentage points. This is due to developments in some of the segments and portfolios, in particular in the Sultanate of Oman, which is presently one of our core markets, obviously, and in both the medical and motor portfolio, impacting it, where we believe it's partially to a good extent with one-off effects. Next to the technical part, and you see on the next columns in the same slide, the investment income has increased from 5.8 to 6.8 Omani Riyal. So it's an increase by almost a fifth on a year-to-year basis. Again, there is partially an attribute and a contribution that comes from the fact that the deal has materialized. That alone is accounting for 2 million Omani Riyal. If you look at the existing apple-to-apple comparison for the NLGI entities, it has led to a slightly lower result, and the yield is 4.4% compared to 5.3% in the previous years. However, this has to take into account there are also some one-off effects. In the previous year, 2021, a bond was sold in the first half of the year, which alone amounted for about 800,000 Omani Riyal. If you take this into account, the 5.3% yield would shrink a bit towards 4.5. So it's relatively unchanged or only slightly deteriorated if you would take apple to apple as a comparison. Now, I talked about the NUR and investment income. What does it mean for the final profitability? As one indicator, the profit after taxes has gone down by almost 50%. We talk about here in this case about the profit that is attributable to the equity shareholder. And that has been impacted by a number of factors. As you see, it went down to 3.7 million Omani Riyal. A number of business factors across the region have attributed to that, the claims development in a couple of markets, as I mentioned on the NUR in Oman in particular, where the claims ratios went up, competitive circumstances in some markets which are ongoing and that lead to pressure on the average premium, as well as certain effects that are associated with the merger deal and the expenses that come for the acquisition with RSA. These are some of the main factors and that have contributed to a decrease in the last year, 2022, of the PAT, the profit after tax. This is a bit on an overall. I also would like to show you an important element, and that is part also finance, but also strategy, that shows already in 22 a significant change in some key ratios. So on this and the subsequent slide, you see the impact of the planned diversification we have. We want to diversify in terms of geographies as well as in terms of product lines. And what you can see here on this chart is in terms of geographical diversification, being present in 5 markets. It's important to note that the share of our core market is going down and it's rebalancing. UAE is still providing the highest share presently, with more than half of the overall gross written premium. The share of the Sultanate of Oman is going down significantly. You can see on a year-to-year basis from almost 45%, it goes down to 32%. This is because of the planned and targeted diversification. And you can see also very nicely that the share of the Kingdom of Saudi Arabia from 0, obviously, went up to 13% in 2022. It will automatically go up further in 2023 because of the annualization impact. And overall, it's important for us here to note the key part is here, increase our presence in other markets. And as also mentioned, we target further to also enter the state of Qatar, which will further help the diversification efforts of our group. And next to the geographical diversification, it's also a segment line of business diversification, as you can see on the subsequent slide. And here you see that the approach of having a strong focus on medical, well, medical remains a growth part. We've seen also the strategy matrix that my colleague has shown. But it's important to note that the relative share also decreases here presently from 2021 to 2022. This is simply because our product suite is enhancing and we are targeting to have a kind of a whole suite portfolio. You see here that general, which was not in the portfolio at all, the property and casualty business already accounted for almost 10% in 2022, and it will further increase in the future. And the idea strategically behind it is very clearly diversification also of lines of business, as well as diversification of channels and taking the leverage impact of the general portfolio with comparatively attractive loss ratios. So here again, reduced concentration risk by diversifying not only in geographies, but also in terms of lines of business. And then some further snapshots after talking about some KPIs from the business. What I'd like to convey to you is KPIs on financial strength. Here you see a couple of KPIs reflected in the balance sheet. And you see that in all key indicators, asset size, equity number, shared capital, as well as investment base, it's a significant increase on year-to-year basis, obviously driven by the fact that the merger has happened as well as from the existing business. So moving to a way of further strengthening the financial basis. And I think it's even better explained on the subsequent slide, where we talk about one of the key metrics for insurance companies, that's the solvency margin. And as an example, you see here the coverage ratio for NLG as the parent entity compared to the RSA-MA entity, and then also taking both together for the group. And you see it's very solidly above the requirement of 100%, the regulatory requirement. And when you see, for example, here for the parent level, the model that is underlying for information is as required by the regulator in Oman, the CMA. It's the recently introduced risk-based capital approach, which also takes into account various effects of various risks, market risk, concentration risk, operational risks, etc. And you see it's a very comfortable coverage ratio of 5 times at 500%. For the other entities, if you look at them separately, it's also very strong. The RSA and E entities composed of various entities in the single countries in total achieve a solid coverage ratio of 270%. This is following, and this ratio is computed based on the regulations by the local regulator in Bahrain, where the consolidated entities are found. And if you take a combination of the NLG parent as well as the RSA entities following an internal model, you find as a mix and average of a solid 372% based on the figures of 2022. So this helps us to stay on a very solid financial basis this year and the future as well. Thank you for your attention for now. And we move to the next chapter related to what happens in the markets.
Very good. Well, thank you very much, Dr. Abdullah. Again, and we will have obviously space for questions and discussion, but one of the key takeaway is the net underwriting result evolution, which means the underlying business performance, which in challenging markets across the GCC remained relatively good. That means loss ratios as well as the technical elements are there. There are the challenges on the other side, as Dr. Abdullah explained, across the market. And that's what we want to also share with you here to give you a quick snapshot. As I said at the very beginning, we are not just an Oman-based insurer, but we are across the GCC. And what we try to map here across the various business line, health, motor, property, and life insurance, what do we see strategically as the growth areas? And I can highlight a bit to you some of the key elements. Obviously, green marked are the fields where we see a lot of development. And you can see across the whole of the GCC, health insurance is a key driver. You see a strong development, mainly driven through either government mandatory health schemes or government incentivized schemes, but also the awareness of medical combined with a digital savvy, I would say, population and under-penetration, which is still there across many of the territories, make a big difference on the health side. Especially bigger markets like Saudi Arabia and also Oman, depending on the launch of the mandatory health. Motor insurance, I would say, is more mature, and you can see there's still development in the UAE and KSA, mainly on the back of the growth of the population, where I believe both markets, UAE, KSA, including Oman and other markets as well, there is also that diversification away from pure motor subversions, or then again, personal lines insurances, which become more and more important, where we again see very low penetration rates across the markets, which are the highest in the UAE, which I think across the markets is around 2.3%. But when you look at Saudi Arabia with a population of 30 million people, it's only 1.3% penetration. And if you then make calculation on the potential, on the growth, on the development is very, very strong, where we believe we will see a lot of development going forward. When just to add on, also Oman, I think on the non-life segments is around 1.3% penetration, which again, to mature markets in the GCC, I would say like the UAE, where it's 2.3 or even 2.9 in total. But then you have the Western markets or even some of the Asian markets, which are higher. Property casualty insurance, the key drivers we see coming into KSA based on the development Vision 2030, but also the UAE remains one of the centers of the development in the P&C, which is mainly commercial insurance in our definition. Will be very strong. We'll develop infrastructure project, but also global trade and other elements which are driving the property casualty insurance. Life insurance in itself, a concept, of course, not yet established to the extent, but we see, and you see at 4.1% growth, what we anticipate in Saudi Arabia, it is coming up and coming. There are initiatives, again, government-led to support the development, be it then for life insurance, be it then for pension insurance, savings insurance, etc. So again, I think this is definitely a strategic pillar and place to watch and keep a very close eye on as we move forward. If I were to summarize it on the next slide, what we believe and what makes us really excited about the region is the opportunities for insurers and even beyond insurance is really huge because innovation is happening, markets are changing, economic environments compared to global environments, particularly last year and hopefully this year as well, are really more positive, more favorable. So economic growth is there, development. Look at all the visions for all the territories, what we are seeing in Oman, what we are seeing in the UAE, what we are seeing in Saudi Arabia, and even in the smaller countries in the GCC. Really impressive population growth is a big topic, for example, in the UAE. Dubai as a center, again, planned to grow in the millions, which of course will still further demand insurance solutions, be it then on the way I would say the country in itself evolves through infrastructure and others, but also for people who are moving. Controlled inflation, non-oil diversification, etc. So all these elements on the economic side make us very excited. Regulatory investments, and again, I talked about some of the visions, and insurance is a core pillar in all these strategic elements because insurance is the risk manager, enabling, empowering basically society to transform, but also making the investment sustainable and making sure things happen in the right way. So that's where you see all the agendas driving really in the right direction, including the investment and building up local talents, which is very, very important for sustainability and ensuring that tomorrow we have strong players across the market. I want to call out mandatory health as a really standalone element, and this is very important for not only Oman. We see the development in the UAE, we see some development in Qatar, we see other developments in Bahrain. Again, these are topics which the governments address very much. And if you look at this opportunity in itself, this is really huge market opportunities, but not only through the mandatory health, it's the awareness which is driven to the population, to all the people, what health insurance stands for and insurance at large can do in life and to build really a sustainable middle class, allowing people to focus on developing themselves. And you see also the preventive healthcare, which again is part of our strategic thinking of saying, how do we make sure we can prevent? We are not just an insurer where we take risk, but how can we play in the field, as we call it, beyond insurance at some spaces? And you heard me saying at the beginning, through TPAs, through our health offerings, through our capabilities in India and other parts, we really believe we can play, which is the last pillar, the digital advancement. It's most probably the world's highest digital adoption in the GCC region. It's a young population. When I'm looking at various countries, I'm always very much impressed to see how everything goes online, how things are really on your phone. You get things moving very fast, very quick. And governments are really investing significantly in technology. So do in segments, financial services and insurance. And I believe that's a huge opportunity. Again, for us as a regional player, invest once, use multiple times, be a leader, help the people on the journey, link up with governments and make sure that from a technology perspective is really to be there, to be very competitive. As I said, invest once, use multiple times. That's one of the credos we are really living by in NLGIC Group. So that's, I think, the wrap up of where and why we believe there's a lot of opportunities. Now, just to end the presentation, obviously 2 pages where we always monitor ourselves as well. While we are convinced and convicted of what we are doing, how are our customers seeing it? How is the public seeing us? And what you see on the next page are just a few examples of awards which came through the multiple entities we have in the group, be it RSA Middle East, be it NLG Oman, be it the branches in Dubai. And as you can see, it's really a combination of various elements where we are very proud of being a trusted brand, having been there for the customers for a long time, but also being recognized from a financial perspective. And what you, for example, see in 2021, the Dream Employer of the Year Employer Brand Awards, which again speak a lot about the quality of processes, teams, and the way we want to position and start with our own colleagues to then bring the services out towards the wider. On the next slide, again, it continues, and most probably we could fill a few more slides, but also international recognition, like the Middle East Insurer of the Year by some international magazines, and by Financial and by Forbes, etc., etc. Again, for me, important to always have the outside look to see how the market is seeing us, how our customers are seeing us, how our partners are seeing us, and how we are perceived as a brand, as a company, and how do we play our role in society. We talked a lot in the last 43 minutes. Obviously, we want to give you the opportunity to ask us some questions that we can go through. Maybe, Shaima, if I hand it to you to moderate through the questions, most probably the easiest is to raise the hands, and then Shaima, you just hand over the questions and we take them one by one.
Yes, definitely. I think we have around 17 minutes, so opening up the floor for any question. You're welcome to, you can use the chat box or raising your hand so we can direct the question from you and initiate it accordingly.
Obviously, if there are no questions, then we can also allow you have the early lunch. But now, Joyce,
we have
I think,
a question from Joyce. Go ahead, Joyce. I'll just, go ahead.
Good afternoon, and thank you for the elaborate presentation. I have a few questions on. One is on your ROE generating capability. National Life, when it came for the IPO, it was generating ROE in the range of around 18%. But at the same time, right now, we are seeing the ROE has deteriorated significantly over the period. So where do we see the ROE getting stabilized? And what are the triggers that we are seeing for the reversal of ROE? And where do you see it settling down over the long-term period?
I'll pass it on to, I believe, Martin, you can address this question.
Yeah, I think obviously I'm also looping in Dr. Abdullah and Venkat. I think you were here when we did the IPO, but again, I can speak on the broader picture. Obviously, ROE is driven heavily by the profitability levels and levers, which, as Dr. Abdullah explained, for particularly 2022, has been a difficult environment. And that's, I would say, very much market-driven environments, which we see across the GCC. Not many markets and not many lines of businesses performed well. We see positive trends, which will then help us, obviously, to improve profitability and the ROEs going forward. In hardening of rates in the Kingdom of Saudi Arabia, for example, but also the UAE, I would say, bottomed out, and we are seeing some positive trends where I think Oman is still towards the softer part, but even there, I think we clearly need to see a hardening of the market, which then always translate into higher profitability, which will drive it. I'm not sure, Abdullah or Venkat, whether you would like to add a bit more detail, because there are obviously other elements driving the ROE.
Yes, if I may add to that, to what Martin has mentioned on the market and the technical part, indeed, this is an element where we believe this helps to improve the ROE. I would like to add also that in the short and midterm, we also expect synergy impacts that will help to improve that operational performance. And as another element, I would also like to talk about briefly about investment income. So by applying a consistent investment strategy across the group, this will also help improve the returns from the non-technical part and improve the ROE. And these various elements in the technical part as well as in the investment part will help further strengthening the ROE in the midterm.
I think adding to what Dr.
Right.
Abdullah said, one of the key elements, that was mentioned, that was covered by Martin and Dr. Abdullah, is these all play a huge part in our new strategy, which we've presented today, which will really add on and help us achieve in our ambition into, embracing and synergizing our portfolio to really help us become, embedding our technology, our people, our talents, and the combination of our strong portfolio of two very strong players into helping us achieve that ambition and improving our performance, as a company. Sorry, I'll pass it on to Venkat.
Yeah. Joyce, I think on the ROE, yes, during the IPO or for the following years, that ROB has been around 16-17% has been maintained. Now the changes, like the market dynamics have changed. The ROE was driven by a medical portfolio and then the motor, where the rates were good. As National Life, as a single company, like the portfolio, both of the portfolio was very strong performers. If you look at it in the past on the investment side also. So the three contributed to the very high ROE and the expense part of it. Now there are two organizations have come together with a lot of complements together. So like adding additional markets, adding additional lines of business. So those all things are happened, and the market dynamics also have changed now. Like motor, we are all aware that motor is going through a tough time in Oman. The rates have gone down. The parties have moved from a comprehensive insurance to third-party insurance. The medical rates have gone up, and following the COVID, a lot of changes have happened. People going to the hospitals have increased. So both the portfolios have come under pressure, which were used to be the very star performers. Now there is an adjustment happening in this. Now, if you look at it, yes, there are more markets opening up. Like if like last year, Oman, Dubai has done. There are other markets opening up like Bahrain or Saudi, all those sort of things. So moving forward with a correct line of business and right selection of business, there could be the chances are that we should come back faster. With adjustments, and we should be able to catch up the ROEs. If not to that level, definitely a good level. We should be able to come forward because now the playing field is large because complete GCC markets and the expertise, and we have got the lines of business which is helping us. So it's a temporary arrangement, temporary thing which is hitting us now. I think moving forward, we should be able to come on track. That's what we believe.
I understood. Thank you. And just to follow up on that, right now our ROE is around 2%. So, what will be a comfortable level of ROE that for National Life? Earlier it was in the high teens, and right now we are very low single digits. So it's a big range that we have seen right now. So going forward over the medium to long term, what should be the level that we should be looking at as investors?
Martin, can I take or you take this question?
Sure, Venkat. Happy for you to take it.
See, ROE comfortable, if you ask me back to 17, we are very comfortable choice.
But the questioners will be reached there anytime soon.
No. It's an effort. It's an effort. One thing I can tell you, we are on the right track. Like Saudi is picking up. If I can give small bullet points here and there, like Saudi, the premium rates have gone up by 50-60%. The motor rates have gone up. This is something. Dubai, you can see that a lot of changes are happening. The bigger portfolio we are talking now, Saudi entry is expected, which is almost we are there. Life market is opening up. We have got a strong partners in Saudi. I think short, we should able to reach the double digits, if not to that level. I think we should able to move forward. The adjustments are happening. Only the market dynamics a little bit, see, like even, that the flu is bit of now affecting now in 23. If you talk to 10%, in 7 people are affected by flu and influenza. So sometimes, the line of business beyond control sometimes happens, but the fundamentals are strong. The system is strong. The controls are strong. The strategy is strong. We are moving forward in the right direction. That's, I think we are confident. I think we should be able to move, Joyce, on this.
Thank you. Thank you. And Abdullah, you mentioned about the non-technical profits. We have a total investments of close to around 300 million riyals. And what I'm seeing is, last year we had some challenges, as you earlier mentioned, in generating the proper yield. What could be the yield that we are targeting for these investments?
See, the current yield levels are around 5%. Right now, we had we had a good a bond book we had, and on the capital gains when it was there, then something was sold that we could realize some of the profits on there. And the fundamentals have not changed. Now, adding with the capital, if you know that RSA has come up with a big capital, and the investment earnings are around 2%. They were RSA was a company which were more on the fixed deposits. Now, as a combined strategy that is being looked into, I think the chances are more that with the capital, the investment base being more on the right way of there, still the markets are good. FDs are giving good rates. So things are there. There's a committee being formed on this. There's a lot of monitoring being happening on this investment side. I think we should be able to move forward on that. Yeah. Nothing on the negative side as far as investments is concerned.
Yeah, the reason why I asked this question is we are seeing the IBOR at very high levels.
Yeah,
Cybor at very high levels, and most of the investment book that recently added to the book is around 200 million, which is added to the group. So I was wondering where should we look at in terms of the investment yield. And National Life, as such, you had a bond book which was yielding around 7 to 8% earlier. So will we be maintaining the similar kind of mix where the RSA culture is more into FDs and the National Life culture will be into bonds and aggressive investments, or will there be a consensus on this?
Yeah, Joyce, that's what I meant. And just adding to what Venkat has rightfully pointed out, that's what I meant when I mentioned earlier a consistent strategy. So it's not about differentiating about RSA versus NLG. At the end, it's one group. And the in the past, rather prudent or conservative approach is being adjusted. We want to target investment yields that are getting closer to what you've seen in the past for the so-called parent entity. So this is the way it's going northwards, taking advantage of current market environment in the financial sector, but also taking account of the fact that the approach will be more growth oriented. Venkat, I think you're on mute. If you talk.
Yes, Venkat, I think you're muted.
Yeah. All of a sudden, you just can unmute you.
I'll unmute.
Maybe Shaima, can you try to unmute or?
Yes. Some reason not able to find it in the. There we go. I'm not able. Okay.
Oh, now, Venkat, I think you had it.
Yeah.
Yeah, there you go.
Joy, another thing is like the fixed deposit is sitting for a particular term. It cross some time. So it needs some time that to liquidate and come back to all those sort of things taking time. But it's a lot of importance, being given on the investment side, given the capital base big. We should be able to move upon this at a good level.
Understood. Quickly on your strategy for one for the Al Ahliya, because right now RSA and National Life owns 100% of Al Ahliya in Oman, and but still the company remains listed. What's your strategy there? Do you want it to remain listed, And if you are planning to get it listed, then there is a minimum float requirement in the market. So just it was a little confusing for me. What exactly is your strategy? Can you give me a quick answer on this?
Yeah, so I can start with it, and Dr. Dhafir, please add any element. You're absolutely right. So and our aim is strategically to make sure that we have a strong entity in Oman, which means the bringing together the strength from both National Life operation in Oman as well as Al Ahliya. And as the next step is exactly what you highlighted, is a delisting of Al Ahliya, as now it's becoming 100% owned by NLG Group, 50 or half of it. Or almost half of it owned directly by National Life in Oman, but then also through RSA Middle East, the remaining part. But that's exactly the process we are in. As we highlighted, I'm not sure, Dr. Dhafir, you wanted to add anything?
No, that's about it. But Joyce, yes, so it's part of the overall plan of the new legal structure of the group. And in Oman, the direction has been very clear with Ahliya buying out of the minority shareholders. We are subject to the various approvals and the processes with the coming EGM. The delisting process will start, and then again, subject to the regulatory approvals, and we're working closely with the CMA, is to transfer much of the portfolio to the Ahliya when it comes to the Oman operations, and then later on, as we rebrand the whole group, and we'll have a unified brand strategy in Oman, in the Emirates, in Saudi, wherever we operate, and that is all taking the shape and the form we are working on. So that's behind the buyout and hopefully the delisting soon. Yeah.
Thank you, Dhafir. Dhafir, just to pick up from what we discussed last time, we discussed about a potential listing of National Life in Saudi Arabia. How far have we progressed on this, and do we have any target timeline on this?
When it comes to Saudi, it's the focus is now the entry and the development of the Al Alamiya subsidiary with the new business, medical line business growing in Saudi, and with the new CEO, hopefully announcement very soon, we expect that to grow rapidly. So when it comes to the delisting, it's still not, we're not expecting this to happen very soon. It would take some time. We're looking at the horizons of not this year, potentially next year.
Fine. Thank you very much. Appreciate your answers.
Conscious of time, I think we have 1 more minute left for any last questions. All right. I think with that, we're clear to close on the meeting. So I'd like to thank everyone for attending the meeting. A very special thanks to our speakers today, and we wish you a great afternoon ahead and a great morning for those with different time zones. Thank you very much.